excited by the money.
Of course.
But let's just move to kind of like the capital markets.
Yeah.
Like, what does that look like currently? I know there's a bit of a dry season happening right now in Africa, especially when it comes to the early stage fundraising. So I just wanted to get your opinion on what that's looking like right now, and how do you think startup founders can actually navigate the space? Because although the capital's running a little dry, the amount of new ideas and new startups getting started is not. So
Yeah, I mean, it's a great question. I get asked this all the time. In fact, that's been the dominant question almost every week this year. Um, yeah, I mean, it's simple. I mean, by the way, this is very normal.
yeah,
That's the first thing I'd say is I've lived through now, I'm 41. I've lived through, if I'm not mistaken, one, two, three, four, five. This would be my fifth quote unquote recessionary environment,
yeah,
right? I mean, not that I was reading books in 87 with the stock market crash, but 87, um, 97, 98, Asian financial crisis, 2001 dot com crash, 2008 um, financial crisis at Lehman Brothers, 2000 and um, 19, 20 slight COVID dip, and it's technically my sixth crisis. So this is normal. This is very, very normal. These are classic um, quantitative easing, quantitative relaxing economic cycles. This is an economist's dream to be able to predict this.
yeah,
This is normal. But when you're in it, it feels horrible. Right? So we've been in a recessionary environment, predominantly because of two reasons. One is the war in Europe is not the main reason.
yeah,
It is a factor. The biggest thing is the rise in interest rates in Europe and the U.S. Right. So we had almost what was it, 2008, more than a decade, 10 years of near zero interest rates in Europe and Western Europe at least, and the U.S. and North America. Right, 10 years. It was almost too good to be true. So you're able to borrow if you're a small business, if you're a large business, if you're, I mean, money was essentially free
yeah,
for 10 years, essentially free,
mm,
and that creates a situation where people overextend themselves, not just businesses but individuals and families. And Alan Greenspan, the former Treasury Secretary, if I'm not mistaken. Yeah, sorry. Yeah. Um, use the term irrational exuberance, and that's essentially what happened. And the moment you have um, a slight disruption in underlying assets, be it homes, be it um, assets, cars, be it just I don't know. I mean, the COVID crisis, you could argue was um, a stark realization that we had overextended ourselves. There was too much money. There was too much supply of free money
it was after COVID when
after COVID. Yeah,
Fed
sorry.
printed out
Yeah, just too much.
a couple of trillions.
There was too much money in the system, and it was practically free,
Yeah,
and the underlying assets weren't as good. So it's almost like you open the hood and you're like, geez, why is there so much money in these businesses? And then to stymie inflation, the Fed in the U.S. and then similarly in Europe had to rise, has to pump up interest rates,
yeah,
and simple, correlation and between quantitative um, easing and tightening, respectively, and you had people pushing back, and now the cost of borrowing is very high. As a result, people spend less. So what you see is when you have cycles like this and the market tightens, the first industry that will feel the pangs are unlisted private markets. So
yeah,
that's private equity, that's venture capital, that's anything that's an alternative investment um, asset will take a hit, and people will flee, quote unquote, to the safety of fixed income, so bonds, treasuries, and then stocks, but diversified. I'm talking, um, blue chips, for lack of a better word. So you see a big run in a bull run in equities.
Yeah. So this isn't what's happening right now with the dry span in terms of capital, venture capital, and its availability in Africa, isn't necessarily a result of lack of investor confidence in Africa, but more so as a result
No,
of just a global
yeah,
recession.
it's a global recession that the effects of which are far more far fetched in the U.S. and North America and Europe to a second degree than Africa. I mean, yeah, you have the usual sort of systemic risk in Africa. There's geopolitical risk, there's currency risk, and all that. But this recession is not fundamental to Africa.
No.
Africa is not at war.
Yeah.
Africa, you know, I joke around to my friends in the West saying, you know, we in Africa don't know what a low inflationary, low interest rate environment actually means. We've always had high interest rates,
Yeah.
high cost of borrowing. So this is nothing new to us.
Yeah.
So this what this is this is a huge problem that has trickled down from the US, from Western Europe into Africa, because trade between different regions of the world has only increased over the last few generations.
Yeah.
So prior to this, a sharp increase in interest rates in the US and Europe would have had a lesser effect in Africa because intercontinental trade was not as big as it is today. Today we live in such a interconnected global supply chain, a free flow of goods and services between continents. It is impossible for you to survive as an economy in a complete, isolationary environment. You cannot, right? So if you're an African producer of, let's say, coffee beans, and you're roasting them in Europe and selling them to coffee shops in Boston or New York, if people, because of higher interest rates in New York, are not drinking as much coffee, that means you're not having enough roasters in Italy sending coffee to the US.
Yeah.
As a result, less roasters in Italy are buying coffee from farmers in Ethiopia.
Eco 101.
Eco 101, right? But 100 years ago, people that produce coffee beans from farms in Ethiopia, I'm just giving a very simple example, wouldn't typically be selling their coffee at Starbucks in Manhattan.
Yeah.
So there was more of a disconnect between regions. So you could survive and you could thrive. I mean, take it back a few centuries ago to India.
Yeah.
India had the world's largest textile industry for hundreds of years, and it was primarily self-fulfilling. Silk in China, another example, right? I mean, I can go on forever, man. I'm a bit of a history buff as well.
Yeah,
but you can't do that, right? The world is so. I mean, COVID is the best example of this, right? What started off as a small outbreak in a tiny part of a province in China became a global pandemic very quickly. The same thing with economic pandemics, if I may use that term, right? So you cannot afford to. So the crisis that's happening right now in the world, from an economic perspective, did not originate in Africa.
Yeah.
Did not. But we cannot but feel the effects of it.
Yeah.
And it has made its way more prominently in the manufacturing world, the heavy industry world, in free trade in trade and development. And yes, venture capital is affected, but not even close to how correlated other sectors are.
Yeah. Okay, so what do you think the best approach for startups building businesses during this time should approach fundraising, or even just they structuring their business
Yeah.
during this kind of dry season, because obviously there's companies that have already received venture capital and are looking to raise a next round, and I think everyone's currently still, well, a lot of the VCs are still actually just raising money from or other LPs globally, and yeah, and I think the projections for how much money is going to come into the African economy is a lot less than we had in the past 2 years. So the reality is not everyone is going to get funded. So how should they actually go about structuring their business or structuring for this market? Or
Yeah, I mean, I think if you look at where the world is from a venture perspective, let's just talk venture for a second. We're just moving back gradually to pre-COVID levels.
yeah,
So I think COVID was an insane, almost irrational spike in venture funding,
yeah,
and the sort of rising interest rates, very quickly rising interest rates to curb that extremely high inflation. Um, this people need to put the handbrakes on.
yeah,
So startups should continue to go back to the drawing board and focus on, if I'm building something of value to someone or something, an organization, I need to have a path to profitability. I need to be more disciplined in my unit economic calculations.
yeah,
I can't just expect to almost throw money into marketing and customer acquisition and sales without figuring out, is this a fundamentally sound business venture? I think a lot of startup founders became way too lax about not just that, but things like governance. I mean, how many startups do you know of, or do we know of collectively, that have advisory boards or governance structures in place, and have just, as the saying goes, like, flown by the seat of their pants?
yeah,
And founders got too cocky. Founders got too lazy. You know, money was money was free. The champagne flowed, and people just didn't realize that there would be a day when money would not be that. The value of money was lost.
yeah,
And the sad thing is, we've seen this movie before, but people never learn.
mm,
So I think startups have to be a lot more um, cautious when it comes to financial management. Um, they have to learn to offer better terms to customers, um, to negotiate better with suppliers in exchange for long contracts. You've got to learn to incentivize your employees with a combination of cash and stock. So you've got to find the right incentive structures that works for your team. You've got to be better in terms of not having to raise or to focus purely on equity as a means of keeping your business alive. So you've got to look at creative um, structures for your cap table. You could look at venture debt. You could look at revenue-based financing. You could look at working capital loans.
okay, quite bad corporate.
No, you might have to in this environment if you have no other option. But it's tough. And I mean, again, I say this with all humility. Like, I personally think less than 0.1% of entrepreneurs should be entrepreneurs. I think entrepreneurship has been glorified way too much in the last couple of decades. Ever since the explosion of the internet, and more so the explosion of the marketplace model and decentralization of assets, you have young folks graduating out of universities today who would make perfectly viable and good professionals in the medical field, in the legal field, in the banking field, in the accounting field, in the services industry, in the yeah, I mean manufacturing, anything. But because entrepreneurship has been over glorified, you have folks that don't have the creative passion, zest, and hunger, and the ability to work in extreme environments of lack of structure to be an entrepreneur. But they choose to be an entrepreneur because it's cool, it's sexy, it's the new vibe, and that's what everyone is doing. I remember when I was a kid in the 80s and 90s, like an entrepreneur was like not even number 10 on a career path choice, not even in the top 20. Now, because you've had so many um, success stories of entrepreneurs, people forget that for every success story, there are thousands of failures, but no one wants to have a glamorized failure, right? So I don't think, and there's a big distinction between startups and SMEs,
Yeah.
right? Like I mentioned, a while ago on this talk, like SMEs are the life and blood of an economy, but everyone wants to be a rock star. Everyone wants to be a tech founder. The number of people that come to us as Launch Africa, we're the most prolific and active research fund on the continent, that come to me with pitches saying we're going to be, the Uber of Africa, we're going to be the Stripe of Africa, we're going to disrupt payments through blockchain, we're going to use AI to change the way schools run their LMS software. And the entrepreneurs know nothing fundamentally about the industry or competition or channel distribution, who the major players are, what their routes to market are. So it's. I mean, I was going to say like maybe we need a cleansing of the ecosystem.
Crazy.
Yeah, where if you're not fit to be an entrepreneur and you're not able to keep up, then maybe it is time to be left out. And it sounds horrible as a venture capitalist myself, because I mean, our money comes from investors who trust us to make the right decisions on their behalf.
Right. So, what are the self-reflection points for the entrepreneur that is simply not good enough? That's chilling at home, listening in, and what should they look at about themselves, and what questions should they ask themselves about their ability in what they are doing right now and whether they actually can do it.
Yeah, I mean, like first of all, do you have the mental, physical, and emotional stamina to to hunker down and just grind through several years of, I mean, I would almost call it trauma to a certain extent of running a startup, because this is not unusual, this environment. It will happen. Um, and the one word I keep coming back to often is resilience. Resilience is not to be confused with stubbornness or blind hope or passion or motivation or grit. Resilience is just the ability, resilience is not being stubborn and believing that what you're doing is correct, and that whatever you are facing, whatever headwinds you're facing, is pure bad luck, and it's only a matter of time before you come out. Resilience is the ability to actually pivot and change even the core of what you're doing, because you make a true and concerted effort to understand why a product market fit that may have been possible earlier is not possible today, and that you can pivot and change based on what the market needs are,
Yeah.
and not what you think you're solving. Every major successful technology startup has pivoted several times, and there's no shame or loss in glory if you change the core of what you're doing, provided you know why you're doing it.
Mm.
So not everyone's got to be it's got to be an entrepreneur.
So is it the creativity?
It's
Is it the creativity? Because somebody can be resilient doing the same wrong thing and
Yep.
be adamant. So is it the creativity that actually really separates the?
It's creativity, it's humility, right? That's super important. Like, I've met some entrepreneurs who are incredibly arrogant and just have this huge, almost like unformidable ego that is so hard to penetrate. And you can't do that in this industry. I mean, unless you happen to be someone like Andy Newman or someone like that from WeWork, who's got incredible arrogance, but also for whatever reason has made a few people a lot of money and can continue to act and behave like that, which I think is absolutely despicable. But for the most part, humility, adaptability, the ability to the ability to give more than you receive. It sounds fairly trite in terms of advice, but people who can add value to others more than what they expect in return, I fundamentally believe, um, um, if not in that particular venture, will build successful ventures and significant ventures going forward.
Yeah. So let's